Hello guys! Welcome back to our channel. This is Jackie, your accountant on duty, who will discuss one of the special features of the ease of paying taxes of the BAR, how it affects individual and non-individual taxpayer, so please stay tuned until we finish the discussion. Anong basihan at kailan dapat i-remit ang VAT or percentage tax? These two main questions affects greatly the seller of services under the EOPT. Why? We hope to answer those questions in this video. We will cover the following known changes on VAT and percentage taxes. Under the VAT vatable amount to be declared for the sale of service. Second, the output VAT on uncollected receivables. Third, changes on the pronouncement of the VAT exempt transactions. And lastly, the improvement on the process of VAT refund claims. On the percentage tax, we will highlight the changes on the tax base in computing the percentage tax. Let's start with the notable changes on VAT tax base. As the name suggests, the EOPT Act aims to increase the government's revenue by improving tax administration. By moving from OR to invoice, service industries, and express shift from cash to accrual basis of tax reporting. While taxpayer from the service industries has a negative perception on this provision, due to shouldering payment of VAT even if not collected, it finally removes the difference in the tax treatment of output taxes for the sales of goods and sales of services. Finally, it will also offer a consistent metric across the tax systems. Prior to the EOPT, tax base are as follows. The sales of goods, whether paid or not, are all reported for VAT reporting purposes. While for the sales of service, liability to pay VAT starts once they collected the specific revenue. After the EOPT, VAT reporting measure becomes standard for both. Whether sales of good or sales of service, the ability to pay VAT arises from the issuance of invoice. While this simplifies the VAT reporting method, it plays a big impact on the service provider's cash flow because it will compel them to remit the output VAT based on the issuance of invoice regardless of the probability of future collection. In other words, kahit di pa bayad ng customer their invoice, sellers of goods and services are both liable to pay the VAT. To address this concern, the EOPT offers through the introduction of the output VAT credit on uncollected receivables. This will reprieve the taxpayer who have not collected the receivables otherwise already reported for VAT purposes. What is the so-called output VAT credit on uncollected receivables? Under the EOPT law, this defined as a seller of goods or services may deduct the output VAT pertaining to uncollected receivables from its output VAT on the next quarter. But the following conditions should be met to be allowed for the deduction. For one, it should take effect after the effectivity of this law. Second, the sale is on account or credit. Third, there should be a credit term. Fourth, the VAT is separately shown on the invoice. Fifth, the specific sale is reported under the SLSP. Sixth, the period agreed upon has already lapsed. Lastly, the VAT component is not declared as a doubtful account expense for your income tax return. As an illustration, if BDN Corporation sold goods worth 50,000 to a client's on account for the period of 90 days or until September 28, 2024. BDN fails to collect the said receivable, it may claim the output VAT credit for the quarter ending December 31, 2024. In the case of recovery of uncollected receivable, the output VAT pertaining thereto shall be added to the output VAT of the taxpayer during the period of recovery. In the foregoing example, BDN Corporation collected the sales on account on March 5. Pending output VAT should be reported on March 31, 2025, the quarter period of recovery. Here's a general guidelines to be observed both by the seller and the buyer. For the seller side, in case of the seller avails the output VAT credit on uncollected receivable, it requires to stamp claim output VAT credit on the face of the invoice. The corresponding copy should be furnished to the buyer. And as mentioned, in case of recovery, the output VAT pertaining thereto shall be added to the output VAT during the period of recovery. In case if there's a partial payment of the said uncollected receivable, the amount collected therefrom and the balance of the uncollected receivable shall also be indicated on the face of the invoice. For the buyer side, the corresponding input VAT claim shall not be allowed as input VAT credit if the seller claims the output VAT credit on uncollected receivable. Ibig sabihin, if si seller is nag-claim ng deduction from output VAT of unpaid invoice, buyer should adjust the input VAT reporting to effect this deduction. Should the buyer continue to claim the input VAT, they will be liable for deficiency taxes. In case the seller fails to provide the copy of a stamped invoice, the buyer can voluntarily reverse its claimed input VAT in its VAT return. Moreover, in cases where goods sold previously were returned by the buyer during the agreed-upon period, the return is treated as a sales return and a deduction from the gross sales in the quarterly VAT return when the return happened. Conversely, if the goods previously sold were returned by the buyer and the seller has claimed the output VAT credit on uncollected receivable, deduction from the sales of output VAT shall be allowed since the claim of tax credit has already been made. For everyone's reference, here's the new look BAR tax form to effect VAT adjustment on uncollected receivables. There are some possible questions on output VAT credit on uncollected receivables. The one who are not qualified to avail the tax credit on VAT on uncollected receivables. Those labeled as cannot be located taxpayers. Second, those with filed complaints at the DOJ under the run after the fake transaction and run after the tax evaders. And number 3, other taxpayers identified by the commissioner. Question: should the seller issue an invoice upon recovering a previously collected receivable? Seller is not required to issue a new invoice. Instead, the seller should stamp the original invoice with the phrase recovered and indicate the amount collected. Seller can also issue supplementary documents such as debit memo or credit note stating recovery of previously reported uncollected receivables. And the good thing, the benefit of claiming output VAT credit is merely an option. This means that despite eligibility to claim output VAT credit on uncollected receivables, the seller may opt not to avail of it. For some taxpayer, it would appear that the more practical approach is to waive the right to claim output VAT credit, especially in cases where the probability of collection is high. Noted by the BAR, this will save the hassle on the part of the seller to claim the said output VAT and then reverse the same in eventual collection. While the newly implemented output VAT credit provides an additional form of relief, it is advisable for the taxpayer to exercise caution in weighing the cost and benefit associated with this provision. For the VAT exempt transactions to be aligned with the changes on invoicing or VAT computations, the following are the amendments to be noted. Prior to the EOPT, VAT is computed from the gross selling price, and upon effectivity of the Act, the VAT shall now be computed based on the gross sales. The annual sale or lease of goods and performance of service which does not exceed the 3 million is a VAT exempt transaction. VAT exempt threshold. All provision mentioning the VAT exempt threshold of the 3 million shall now be stated as follows. The amount of VAT threshold herein stated shall now be adjusted to its present value every 3 years using the Consumer Price Index, as published by the PSA or the Philippine Statistic Authority. Prior to the EOPT, there were no guidelines in filtering application received by the BAR. no definite timeline for the BIR to action for specific applications. These reasons promotes discouragement for many taxpayers not to pursue the refund due to administrative costs of hiring professionals processing the refund claims. And now, under the EOPT campaign, it introduces the risk-based approach to the verification and processing of VAT refund. These changes are poised to have a substantial impact on the way businesses manage their VAT refund claims and promote a more streamlined and taxpayer-friendly approach. What is the three-layer risk base in classifying refund of taxpayers? These are the low risk, medium, and high risk. Let's try to define this three-layer by presenting the following: the requirements needed for this application, the scope of verification required by the BIR, and factors to be considered in the classification. Submitting requirements. All the three layers required to submit the following documentations. All VAT forms subjected for the refund. This VAT form should include the proof of payment and the tax email confirmations. The second relevant document is the so-called SLSP or the Summary of Sales and Purchases, with the corresponding email validation from the BIR. And the last important documentations are the original invoices supporting the sales and purchases enumerated on your Summary of Sales and Purchases. For the scope verification required by the BIR, or it simply means gaano kadami yung kailangang i-validate ng BIR sa mga nasubmit na documents, rule are as follows. Taxpayer under the low risk BIR is not required to have a thorough validation on the submitted requirements. Well, even if the EOPT entails no required examination or verification, BIR may still apply the case-to-case verification. Under the medium category, BIR is required to verify the 50% level of the submitted documents. And for all categorized as high-risk application, the BIR is tasked and mandated to review the 100% of the required documentations. For the factors required for the classification of application, the following guidelines should be considered. Number 1, the claims filed by the first claimants will be automatically considered as a high risk and will remain as such for the succeeding 3 VAT refund claims. In the event of the full denial of a claim, the succeeding claim filed will be classified as a high risk. For the third factor, those applications tagged as medium risk claims, verification will be adjusted to 100% if the assigned revenue officer found at least 30% disallowance of the amount of VAT refund claims. Number 4, claims classified as a low risk for 3 consecutive filings of VAT refund will be subject to mandatory full verification on the 4th refund claim, regardless of the risk classification. Number 5, VAT credit or refund claims for any unused input tax filed by a registered taxpayer whose registration has been cancelled due to retirement or from cessation of business or due to any changes or cessation status will be classified as high risk and will require full verification. These are the taxpayer who filed business closure in the BIR office. Then, lastly, the risk classification will be made for every filing for taxpayer filing quarterly. Well, I hope the BIR will issue a more detailed guidelines and memorandum in classifying VAT refund application to encourage more taxpayers. As for the timeline stated on the EOPT law, a VAT refund will be granted within 90 days from the date of submission of the complete documentary requirements. In case of full or partial denial of VAT refund claims, the taxpayer may appeal to the Court of Tax Appeal within the 30 days from the receipt of the decision denying the claim. However, in case of inaction of the BIR within the 90-day period, the taxpayer has the following options. Number 1, appeal to the CTA within the 30-day period after the expiration of the 90 days required by the law to process the claim, or to forgo the judicial remedy and await for the final decision of the BAR on the application of the VAT refund. And just to note, the risk-based approach will cover VAT refund claims that are filed beginning July 1, 2024, although the EOPT becomes effective last January. The EOPT law does not only affect the VAT computation but also the percentage tax. As part of the result from shifting official receipt to invoice, there is a changes on the pronouncement in computing the percentage tax from the term gross sales or gross receipt to gross sales only. This will cover the following revenues. Number 1, person exempt from VAT. Second, domestic carriers, keepers of garage. Third, international carriers. Fourth, franchises. Lastly, the tax on overseas dispatch, message or conversion originating from the Philippines. In summary, the changes brought by the EOPT Act constitute a significant advancement in regulatory reform. However, their implementation is not without difficulties. Certain provisions may require additional refinement to effectively achieve its objectives. Addressing these birth pains is essential for the Act's successful execution. If you are not confident in implementing the new rules, best to engage professionals to be compliant to maximize the solution brought by the EOPT. If you have some questions and clarification, please feel free to leave your comments below so we can address as soon as we can. Please also hit the subscribe and hit button to be updated from our video releasing. Thank you for watching!